Hey, welcome to Echoes of Impact with Noura. This is your host, Noura Almasri. Welcome to the show. I'm excited today to actually talk to my guests. You're going to love what we talk about as well. You often hear the reason why business fail is actually cash flow. While that can be true, and it is true, but the real root cause is you. Yes, you. You the person who is starting that business or starting a nonprofit or whatever that project you're starting, you are the reason why that is successful or not successful. What I mean with that, don't take offense of that because you're gonna understand what I'm talking about. It all comes from your mindset. And I did not realize that until I started my own business 3 years ago. Before that, I started multiple businesses with partners and alone, and I did not continue with any of them. But this is the first time I stick with a business on my own and just keep at it. And what I realized, you will be stuck somewhere unless you actually shift your mindset on a specific topics or a specific matter. That's really what's going to help the business grow. So actually growing as a person is the reason why your business or nonprofit will grow. So if you go enroll in a coaching program and you do not change your mindset, you do not apply the information you get, you're not gonna get anywhere. If you hire an accountant and tell her, okay, help me with the budget, help me with the plan, and you do not implement what she's asking you to do, you're not going to change anything. And we often blame other people for that, but it's us, it's our fault because we are not trying to go deeper inside and within to actually change our mindset in order to be successful in any project we do, including our business or, of course, our nonprofits. So I want you to go ahead today and focus and see, okay, if you're a business, why is that business is not moving forward? Is there something, a skill that I need to be working on? What is the limited belief that I believe that is actually sitting between me and my successful business? What is that? And start working on it, start learning, read books, join courses. A lot of information is there, and watching our show is one of these steps. So stay with us today. I can't wait to bring my guests and talk about a lot of things, and you can see the mindset shift that every person has. This is Echoes of Impact with Noura. We'll be right back. Welcome back. This is your host, Noura Almasri, and this is Echoes of Impact with Noura. I'm really excited today because I have someone very amazing. She is a nonprofit. She's the CEO of nonprofit, and she's making an incredible impact spreading love. I am excited to introduce my friend, Jess. Jess is the CEO of the Jess Wadleigh Love Foundation, and I'm going to have her actually introduce herself. Jess, thank you so much for joining me today. How are you doing?
I'm doing well. Thanks so much for having me. Appreciate it.
Thank you. So usually I like my guests to introduce themselves. How would you like people to know you with?
Yeah, my name is Jess Wadleigh. I'm the CEO of the Jess Wadleigh Love Foundation. And I know we'll dive into a little bit about what the foundation's all about in a little bit, but that's who I am. I'm dedicated with the mission of the nonprofit as well, and just spreading love in this world. And it's an important thing to do.
Awesome. I love the love sign that you have, like in your background. Can you tell us a little bit about that love sign behind you?
Yeah, sure. So the love sign actually was created by my brother, Jess Wadleigh. That's who the foundation is named after, and it's in his memory. My brother was a big Dave Matthews Band fan, and he went to a lot of concerts. And at some point along the way, he just wanted to hold up a sign that said love. And that was to represent his gratitude for how the music made him feel, and for just the band continuing to put out music that affected so many people. And he didn't want to ask for anything. He just wanted to shower love towards them to express the gratitude. And he kind of became known as the love sign guy. And for years, he would go to different shows all over the nation, and here and there he would just hold up his gesture of love, and people really dug that. And unfortunately, in 2009, he passed away of no found cause, and it shocked pretty much everybody. And word spread quick. And following, in the weeks following his passing, people all over the nation just started holding up love signs, and it has continued ever since 2009. It's been just this powerful impact, such a simple word, yet the most powerful word and action that there is.
That's very, and very sad, like to hear that, the loss of your brother, but like you carrying his legacy of love, like that has basically motivated the foundation. Like, can you tell us a little bit more about that? Like, how did you come up with, like, okay, let's start this foundation, let's keep his legacy of love going?
Yeah, so we are dedicated to just spreading love and encouraging others to live a life of generosity and kindness. And how we do that is we took his love sign and we created these little love buttons. They're like these little pins that they look exactly like the sign that's behind me. And the whole point of it is that when you meet somebody that makes you feel loved, or you meet someone that maybe just needs a little bit of love, that you hand them a love button, and that is your gesture of love to them. And so little by little, we ripple love throughout the world, one love button at a time. And we send those buttons out as a thank you when people donate to us. And so all the proceeds then that come in, we put those back out to other charitable organizations that are spreading love in this world. And our three main focuses are the Nature Conservancy, Blink Now, and Marley's Mutts. And so we want to obviously focus in on the environment, humans, and animals, and spreading love to all three of those. And so sometimes people look at us as kind of like the middleman, right? Like sometimes people think, well, why wouldn't I just donate right to that organization? And I think it's actually the most perfect way to look at it, because love is the connection in all of us. And so, yes, we are that middleman, but you're getting this gesture, this token of love to continue to spread love while you know that your donation is doing good in one of those three categories.
This is really amazing and very important, because I was listening to someone saying earlier today, like, we often know the simple thing, but we always need a reminder. And this is amazing that you are reminding people of love, because when anything happened with love, it just like transfer in a different way. It went just like that salt and pepper of love. It's just turn out differently. And I love that you are doing this. You are growing your foundation. I know you also work full time. You have a lot of things to do other than this, but just like what makes you like committed to this foundation, making sure that it's successful? What do a lot of people would give up, like have this mindset, okay, I want to just like, I can't make it happen, and they just like stop and they don't want to try again. So what do you think, like, that keeps you going?
Well, first and foremost, honoring my brother, and such a powerful message that he obviously put out there. Is older than his time, I would say, as far as his soul goes, and really learning from that, but also just seeing the positive impact of love. And it is the most powerful thing. And I think when we first started this nonprofit, it's just about the buttons. Donations came in, we gave the buttons. But in 2018, 2019, it just was like, this has such a potential to be so much bigger. And so I've really taken some extra steps into really growing it on different levels. And it's just, I don't know, the fuel for me is love. When I see someone smile, it could be just me, myself, handing someone a love button. Every single time I do it, it's an instant smile. It might be a hug. It's, oh my gosh, I needed this today. Thank you so much. I get comments all the time that this world needs more of this, or we need this more now than ever. And that's what fuels me. It's just that impact that love has, and seeing the connection between not only humans and what we can do to help the environment and animals. It's all intertwined to one thing, and that's love. And so that's the only inspiration and energy and drive that I need, is to see that is, it's priceless. Yeah.
That's awesome. And nonprofit come with its own challenges. It's not that easy. Like people like feel it seems like kind of romantic thing, like you want to create an impact, but there's a lot of hard work behind it. So how, what have you been doing actually to make sure this is spread big, this is getting big, larger than anyone can expects when you guys started this organization? Like what do you do in order to make sure this is getting bigger?
Yeah, taking the right steps. I mean, you really you gotta have to kind of shift your mindset a little bit when you are trying to grow anything, right? And so for me, taking that next step to making sure I had coaching, making sure that everything was taken care of in bookkeeping, making sure that all the T's are crossed and the I's are dotted, and being creative and communicating, and realizing that when you are trying to grow something, you need more people. You need to communicate. You need a team. And so, yeah, it's all the little steps. It requires a lot of work, and it's all worth it. Yeah, but so like you said earlier, I do have a full-time job as well, and so all my extra time gets poured into this, and it definitely fills the cup and warms the heart for sure.
That's awesome. Thank you so much for all the work you're doing now. How can people get in touch with you, getting this love sign or love button? Like, I know because you have like more than just the buttons,
Yeah.
because this is lovely, and the way you have it written and everything is amazing. So how can people get one of those? How can they support your foundation?
Yeah, thank you. I would encourage people to definitely jump on our website, mylovesign.com. Of course, when you donate, you do get love buttons, and you might get a lot or a little, depending on what your donation amount is. In addition to that, we do have little travel love signs. It's something that we just have started in recent years. And it's people love taking them. That you can fit them in your back pocket. They're like a scroll. And so we have had people send us pictures overseas when they're on a family vacation, when they're at a concert, especially at Dave Matthews shows. A lot of those fans have always been such a great supporting base for the Matt Wadleigh Love Foundation. And so, you just wear your love, you either hand it with the buttons, or you're, opening up the scroll and just kind of proclaiming your love. And we've got, merchandise on there as well, but those are definitely the two top things that people love to receive when they donate. And so, yeah, going to mylovesign.com, also on Instagram. If you just search Matt Wadleigh Love Foundation, you can find us on Instagram, also on Facebook, Matt Wadleigh Love Foundation on there as well. So we do have a pretty good presence on social media, and just try to post things to inspire you and make you feel loved, and hopeful that you'll share that with others that you connect with in your world.
That's awesome. That's amazing. Guys, like, go ahead and get some of those love buttons, love signs, because you're doing good as you're doing this, and then spread love. Get it for your neighbor, for your kids, for your loved one. Make sure you get there and get them. Also, one more thing, like, just look, how can people directly connect with you if they want to support your foundation in another way, maybe do something in partnership of your foundation? Like, how can they get in touch with you?
Yeah, absolutely. You can send an email for sure. You can send that out to spreadlove@mylovesign.com, and that will come directly to me. And we can further the conversation, get on a Zoom call. We can exchange, phone numbers at that time if you'd like to do that as well. But yes, spreadlove@mylovesign.com. You can also message me through the website as well. And if it channels to another team member, I will eventually get it, and we'll definitely connect with you for sure.
That's awesome. Thank you so much, Jess. That was wonderful. I love that you are taking on your back like this a message, having your brother's legacy living and have that commitment and mindset about it. It's definitely changing the lives of a lot of people and making a great impact. Thank you so much for being here with me today. Guys, this is Echoes of Impact with Noura. We will be right back. Welcome back. This is your host, Noura Almasri, and this is Echoes of Impact with Noura. Now I'm really excited to bring my next guest because we're going to discuss a topic that's really important and very close to my heart because I know it affects every one's of you. It affects each and every taxpayer life. And if you understand the concept we're going to be talking about, it's going to tremendously change your life. Help me welcome my friend, Katrina. Katrina, how are you doing? Thank you so much for joining me today.
Hey, Noura, so glad to be here. So good to see you. We haven't caught up in a while, so it's good to catch up again.
Good to see you too. Thank you so much for being on the show. I usually love that my guests introduce themselves to the audience, so no one can introduce you better than you do. So I like to give you an opportunity to actually tell them what you want them to actually know about you.
Yeah, so I'm Katrina Martin. I'm an enrolled agent, licensed by the Internal Revenue Service. Don't work for them, but definitely licensed by them. I'm a certified tax advisor. So I specialize in tax planning and tax advisory services. I have a firm that's based here in Michigan, but work with clients nationwide and globally as well. I mainly work with real estate investors and those that do like short-term rentals and small business owners in the service industries, but definitely advise other clients as far as how to legally lower their taxes to the lowest amount. And then also aligning with taxpayers' goals. So, there's not one size fits all. So I try to make sure that we customize plans for people and get them in the right place to make sure that they have the peace of mind and the freedom that they want.
Awesome. Thank you. So you have so much certificate, like on top of it, like you're an enrolled agent and you can represent taxpayer. Now, whenever I talk about tax planning, people think, oh, okay, planning to do my taxes. That's how they understand it. I did a lot of content and I know you do a lot of content about it, but still people ask the same question. Think like, how do we, in your opinion, like how do we do this mindset shift from like tax prep to tax planning?
Yeah, I love that you brought that up, Noura, and you're absolutely right. People assume that the preparation is the planning part, or gathering the documents for the preparation is the planning part. Well, in all honesty, planning happens right now, right after tax season. We look at what your taxes look like. We look at how much you owed. We look at some solutions and strategies that we can implement to bring that liability down legally, and implement those strategies. I find that a lot of times that people will think that tax planning happens when we're preparing their tax return. Like, well, are there additional savings? Are there other things that I could do? And it's like, well, when we're filing your tax return, we're actually talking about the prior year. So there's very little that we can do at that point because everything already happened. The last few straws that we have, we find a lot of times that maybe your income doesn't meet to do any last minute things or things of that nature. But what I find works the best is actually working right now throughout the year to making sure that we get your strategies in place.
That's very important, guys, to have your strategies right now, like go connect with your tax professional. And if you don't have one, we have someone here, right here with us. I know Katrina, she's amazing with tax planning. Actually, this is one of her strength suits.
I like it.
Tell us a little bit about your favorite tax strategy.
Well, my favorite is there's like four tops that most people qualify for, like definitely home office deduction when you have a small business and you don't have an office outside of the home. home office deduction is an easy solution that a lot of people overlook. And that's usually can be a savings of at minimum $1,500, and it can grow just based upon what those, what the other costs that happen in your home and in your office, those apply to that overall savings. The second one is hiring your kids. When people have kids, they're not only dependents if they're helping you in your business, actually doing the proper protocol and bringing them on, having them be paid, you pay it into their account, and investing that money into, since they have earned income at that point, they can actually invest into a Roth account. So you can have your minors building up tax-free income for the future that when they get old enough, they can choose to do with it or pay for college, or it can just be extra cash for them, but it grows tax-free if it's in a Roth account. So just different strategies like that. Home office deduction, of course, the Augusta rule, where you get to rent out your home for 14 days or less per year and not have to claim the income. That's an excellent strategy that a lot of times people don't think about. And renting out your home doesn't necessarily have to be to strangers. You can rent it out to your business for those 14 days or less a year.
So yeah, this is very interesting. And like you said, a lot of people actually overlook this. And you being the expert on helping people who are doing those short-term rental and stuff. So can you give us an example so people can understand how can they apply it between themselves and their business?
Yeah, so with the Augusta rule, yeah, so basically where a lot of people don't understand where the planning comes into place is because you have to document everything. If you get audited, you can't just say what you were trying to do. It has to be documented, and you have to show that you are actually following the plan that you put in place. So for the Augusta rule, if you're renting your home out for 14 days or less per year, you have to rent out for fair market value. So you need to do the research to see what rentals are going for in your area for comparable spaces. So if you're looking at like an event space or renting out a virtual office space, what does that fair market value look like? And you need to have your comps in your backup documents to show how you landed at that number. And then actually documenting the actual meetings that you actually take place in your home, and making sure that that's separate from any other things that you're taking write-offs on, right? We can't double dip. And so making sure that, and you're actually paying yourself from your business to your personal account, documenting that, but everything has to be documented. And that's where a lot of times the planning goes off the rails. Just because you have a conversation about something doesn't mean you have a plan in place. There's the implementation, and that's where we really help clients, is applying those strategies, making sure that we get all the I's dotted and the T's crossed so that we can legally justify these strategies, because it's one thing to want to do the strategy, it's another thing to do it properly.
Yeah, that's very important. And I was reading over the IRS website the other day, a case study that someone actually rented their home to themselves, to their business, for hundreds of thousands of dollars. Of course, that was disallowed, and
Yes.
they allowed them only the fair market value. But now, like, you have to think about another strategy, or you did not put aside enough taxes to pay those taxes. So it's very important to actually work with a professional who knows how to implement those strategies.
Absolutely. And when you get something tossed out like that, you just open yourself up for more exposure, because now they're not just going to look at the one thing, they're going to look at everything, and they're going to go back and look at prior years too. So it makes sense to do it right the first time, because then you're kind of saying na when you do it wrong, and then it just kind of exposes you to say, hey, what else have you done that may not be right? And so then you have to go back, and if you've had reduction tax savings from that, then they're going to reevaluate the return, and you could end up coming out of pocket along with penalties and interest on top of that. So it just makes sense to do it right the first time. I'm a firm believer, since I work with real estate investors, they always get this term, measure twice and cut once. Like, we want to make sure that we're doing things right before we make the big slice and actually implement something.
I love that. So when someone can know this is okay, I need to do a tax plan. I know some people, they don't have a business yet, maybe not thinking of having a business, but they are high earner and they getting those big money cut from their W-2s. And they don't even notice them. And you know, they know like they're getting a check, you know, amount in the check, but they feel like if I don't owe money when I do my taxes, then I am fine.
Yeah.
What would you say for those people?
Yeah, sometimes you're just overpaying. And you know, and sometimes even when people are getting refunds, they're excited about that, but sometimes you're just getting your own money back. You've overpaid, you're just recovering your own money. And that it's nice that you didn't owe them anything. However, you've lent your money out with no interest on top of it, right? So you just lent it out for free. Whereas if you owe in reverse, you're paying interest on that money that you owe, right? So there's no need to let somebody sit on your money for a year when you could have used that. You could have done a ton of other things with that. So a lot of times I see people, especially high net worth earners, who aren't implementing any type of strategies. And just because you're W-2, if your liability is high, there are solutions that we can put into place to help you lower that. And a lot of times I can look at W-2s and see where there's additional savings at. Where there's, you know, people are leaving money on the table, and a conversation and a quick plan. You don't have to do a plan every year. When we do a plan, we're forecasting for a few years out. That's a tax plan is a tax write-off if you're a business owner. So if you're a business owner and you're putting a tax plan in place, that is a tax write-off for you. It's an accounting service. So my favorite line is, don't be cheap with yourself, because it costs you on the back end. A lot of times this is the write-off in addition to us finding you additional savings, right? So it's a win-win, and it's not something you have to do every year. Tax prep is just basically compliance. Every year you have to file the return. It's compliance work. Every quarter you need to file estimated taxes if you're above a certain tax pay grade. But there's certain things that are just compliance piece. But in order to benefit you, you need to plan and put a plan in place to make sure that when you're doing the compliance piece, you're paying the least amount that you can pay.
That's awesome. So speaking of compliance, if someone is not doing bookkeeping, a business owner not doing bookkeeping, which is compliance work, it's not up to you.
Yep.
Can you do a tax plan for them?
You can. It makes it difficult, but it sometimes it exposes where things are, you know, where you're kind of leaving things that you're not able to pull financials. We're not able to really gather the information. And then truly, how are you managing your business? If you can't tell me how much you made this month, or how much you made this quarter, or how much you made last year, you're kind of doing a disservice to your business. If you can't tell me how much is going into your operations, how much are you spending in all of these other areas, how much is your payroll? If you have payroll, do you need payroll to grow? Those numbers really matter because they tell a story of how successful you have been and where you're going to go. If you don't know what those numbers are, then you're kind of stuck.
So in other words, and tell me if that's accurate or not. If you do not have a good system of bookkeeping, your tax plan might not be as accurate as it should be.
Absolutely, Noura, you hit the nail on the head, because we're working with made up figures, like we're roundabout and estimates. So usually when we're doing a tax plan, we ask for the last 2 years of tax returns, because we use that as our basis. And then we look to see where you're at right now, because maybe you've gone up in wages, or maybe your business has grown. So we use those numbers, but we want to forecast to be the most accurate. So having the most accurate numbers are going to help us to customize the most effective plan for you.
Awesome. So this is very important information. And actually, I identify tax planning as optimizing your tax situation. So make it maximizing that benefit for you, because at the end of the day, I feel that and I see it, like the government like want to push you in certain directions, so they want to encourage business. So I actually make deductions more available for business owners. They want to increase like capital investors, so they charge you less taxes when you are getting capital instead of just regular earning income.
Yes, absolutely. Capital gains is taxed at a lower amount than your active income. The other thing that I like to point out too is, a lot of times I have clients, like I just worked with, it's just tax season just wrapped up, and I had a couple of clients, new clients, one client in particular that came, and they ended up owing. And they were like, well, is there something that we can do? Can we put into retirement, you know, last minute? Because that's like the last ditch that we can do is a retirement investment at the end. However, their income didn't substantiate it, it still canceled it out. So it gets really tough trying to plan for things after the fact, because we can't go back to December 31st to try to fix anything in a lot of situations. So, and then the other thing that I find with a lot of times, people are making decisions without a plan, and they're maybe moving too fast. I've talked to several people who've put their businesses into S Corp status or C Corp status, when I wouldn't have advised it at this time, because their business is not there at that price point where they need it yet. So right now they're costing themselves more money by moving too fast. But when you're moving without planning, you're kind of going to be making mistakes along the way, where a plan can eliminate those things.
Yeah, definitely. I have these people coming all the time. Like, my tax preparer actually found like I owe some money, and they said like, you have to be an S corp. I'm like, how can you just do such an advice without even doing a tax plan before, to see if really is gonna make sense for that specific person? Because I guess people just go off the advice on short videos on TikTok, that's where out of context, or someone did it for their business and like, okay, they save money, I should be saving money too if I do it this way, when in fact it's not the right move. You said that's moving,
No,
or maybe never good.
No, I've seen so many new businesses out the gate coming out as S corps, and I'm like, hold on. Now you do know, you do know when you put an entity in place, like a small business entity, because that's what an S corp is. What you're doing is you're saying, A, I'm gonna make sure that I'm doing bookkeeping, because I need to be on accurate with this business structure, right? I've got a whole nother tax return that's going to be associated with this. And another requirement of that is I have to be on payroll. Does the business have enough income for me to even go on payroll? Does the business have enough that's going to be left over for me to even afford this extra tax return, right? And so it just makes sense. Or they're throwing real estate in S corps, which I don't advise. Just making moves and then finding out after the fact that wasn't the best situation. And it's easy to get in something, but it's 10 times as hard to get out of something. So measuring twice, cutting once is imperative, and planning is helping you do that measure twice situation.
That's very important. I cannot agree more. Thank you so much, Katrina, for all these nuggets that you give everyone today. Last thing is, how can people get in touch with you?
Yeah, so you can find me on Instagram, YouTube. My YouTube is Katrina the Advisor. Also, my website is Katrina L. Martin, L as in Lynn, KatrinaLMartin.com. And our phone number is 313-769-9694. And I look forward to talking to your viewers.
That's awesome. Thank you so much. I'm really happy that we were able to get you on the show today. I'm sure like people got tons of value from what you spoke about. All right, guys, thank you so much for listening. You're welcome. Thank you. Make sure you connect with Katrina. She works with everyone, nationwide. Yep. This is Echoes of Impact with Noura. We will be right back. Welcome back. This is your host, Noura Almasri, and this is Echoes of Impact with Noura. We're going to end with an amazing guest. She was here before, and we had to bring her back because a lot of people wanted to hear about the grants. Grants to purchase your home. And we'll talk about to her and see what are other grants, actually, if there's any available. But without further ado, I want to welcome my friend, Inez Flores. Hi, Inez. Welcome back to the show.
Hi, everyone. Hi, Noura. Thank you so much for bringing me back on the show. It's really a pleasure and an honor being here on your show and taking time to explain and talk about our programs. Thank you so much again.
Awesome. Thank you so much for accepting our invitation. A lot of people wanted to hear more about the grants because I know last time we kind of touched base on that. And you guys, if you did not hear Inez and her first segment, you can go onto the show page and actually look for the episode about purchasing your home. She was a guest there, and she spoke a lot about what you need to do in order to get the mortgage and to be prepared for that. Now we're going to talk to her about the grants. Before that, I want you to introduce yourself a little bit, So for those people who did not watch your segment before.
Yes. So hi, Nora. Thank you so much. Again, I've been working as a mortgage loan officer for the past 6 years. I love it. There's a lot of programs, grant programs, home equity programs, different things to offer our clients. You don't have to bank with us. I service all 50 states. So there's a program just about for everyone. Our rates are very competitive. Our home lines of credit and our home equity programs are no cost, zero cost from our clients. We cover those costs, no appraisal fees, which is another benefit for to take care of our clients. For the grants, we have a lot of first-time home buyer programs. Some of those are with grants. It's depending on where you live, your gross yearly income, your family members living in your home. So I kind of do an intake application. I apply for the loan for the grants. And as soon as you find a property, we see where that property is located, and we also see if you qualify for an additional down payment assistance program. So it just depends on every client has a different plan, and it's a different case. So we just about based on how your income and things like that.
That's
So yeah.
That's awesome. Thank you for sharing this information. And today we're actually focusing a lot about mindset, and a lot of people they just think, okay, I'm not going to be able to afford down payment. I'm not going to be able to purchase a home because I just don't have the money. And they don't even ask, they don't get more information. They just assume. And what we're talking today about, like, it's mindset. You have to change your mindset. You should have actually just have the courage, speak to someone, get more education, and see what's in the market, because what it's worked last year, it might not work this year, and vice versa. So with that, like, you're kind of telling us, okay, there is a help from the government. Is it from the government?
Yes, well, we have several organizations, the government. I mean,
Okay.
it depends. Yeah, but
Okay.
you're
So,
right. You're right. It is a mindset. And it's a very important decision, right? So sometimes we don't want clients to feel uncomfortable or do something they really don't want to. So we kind of do a plan of action for our clients to see what they want to do, what their future is. When are they planning to buy? Are they planning to buy tomorrow, next month, next year, in a few years? Sometimes they have other priorities, they want to, start a family, and having a house is an important factor. But if the client's not ready, we do not want to push them. So we always kind of walk with them and see what they want to do first before we just, push them into something they're really going to be uncomfortable with. We compare them with what they're renting right now. Some, are renting and they're probably paying more than what they're renting. So we kind of do the comparison, if it's worth it, but then sometimes they have to come with down payment. So we want to see how much they need to save up and what other programs are going to cover those fees. Some cover, just about everything in order for them to start. So putting a plan of action is important, because that way the client it builds a comfort level for the client to make that first step.
Okay, that's awesome. And for those of you who do not know what grants mean, grants basically is a free money. You take it, but you don't have to pay it back. So it's yours. If you qualify, it's yours. Can you walk us through, like, how many actually different grants there is, like the most popular, and how much can someone get? Like, I know it's going to vary from person to person, but in general, like, from your experience.
Again, it does vary for person to person, but we have programs, from 6,000 to 23,500. And in a few cases, I've done all the way to 40,000. Some counties have their own grants. So they do, we offer 23,500 plus 25,000 that Will County, for example, in this case was offering. That's a total of 48,000. It depends what county. Some counties have their own grants. So we are able to do our research and see what matches that up and see if you qualify for the guidelines. So, some is like, it's just 2,000, depending on where you're buying. It might not be in a county where they're offering that. So it all depends. And sometimes a lot of people are like, well, I want to know what counties are offering which county. Well, sometimes it depends, because maybe with your income, you don't qualify for the grants. So it's not so much of, let me stay in this, geographic map that you guys have in order for me to get the grants, because sometimes you're over the income limits for that area and you don't qualify regardless.
And does it have to be actually the first home buyer, or is it available for even second time buyer, third time
It
buyer?
has to be a first-time home buyer, but sometimes the clients are not aware that if you haven't had a house for over 3 years, you're considered a first-time home buyer again.
Oh, wow. So, for example, I purchased my home like over 20 years ago. So now I can buy a home as a first time buyer?
Yeah, if you purchased 20 years ago and then 10 years ago you sold your house for whatever reason, and you're just renting for the past 10 years, you're automatically a first-time home buyer.
Oh, so I shouldn't be having my home. Like my home should be gone in order for me to. Okay.
Your home should be gone. Yes, because
Okay.
because that changes into a investment situation, right? Because now you're not a first-time home buyer. You have a home that you're gonna rent or do something with it, sell to buy this other home. So you're having funds from your previous home to buy this other home. So then there's no need for the first-time home income grant because you're gonna
Got
sell.
it. Okay. And this is available in all 50 states. You just have to look in the area the person is interested in and to see if this is available to them or not.
Correct. So the grants that we do have, they're for Illinois at this point, we're Illinois. There's some out-of-state grants, but the client that does want to live out of state, they gotta kind of do their own research. They will let us know, and we gotta see if we meet those needs, because sometimes the financial institute has to be, a partnership with that particular grant.
Awesome. Okay, got it. Got it. Thank you so much for this information. I know also like some people want to have some extra money. They have their home, and this is when you come in, and this is like you are very strong in this area in home equity loan. So can you give us a little bit about that and what would be available and what can be a person like use this for?
So we have several home equity programs, debt consolidation, home improvement loans.
First, like what is like home equity loan? Because maybe some people are familiar with it, some other people might not familiar. What is that? So can you explain what is that?
Sometimes a home equity loan is basically you're getting money from based on the equity that your home is valued at. Okay. So depending on the value of your home, if it has enough value, you could borrow from your home
So for example, if you have a home that's worth 250 and you paid off like 50, then you might be able to take up to $50,000 of home equity loan. Is that accurate?
Well, we do up to 80% of the value of the home.
80%. Okay.
Up to 80%. So for
80% of the value, but they have to be.
So let's say your house value is 200,000. 80% is 160.
Okay.
Okay. Let's say you owe 60 still on the house. Then you get 100 because you still owe 60. So then it's 100
that makes sense. Okay, awesome. Okay. Awesome. So okay. So yeah, can you elaborate now like on what type of
so in that example, out of that funds that you want to obtain, you would pay, we have, depending on the term that you want, let's say you have 5 years, it could be at 6.875 for 5-year term. I would have to check the terms. There's 7 years, there are 10 years, 15 years. 7 years might be 7%. 10 years might be 7.5. So the more term, the higher the interest rate.
Okay. And so, do you know? Okay, go ahead.
Those are fixed rates. So once we close in a week, within week closing or less, you will get those, in that example, the 100,000 into your bank account.
And that if someone does not pay, then you take the home, right?
Your home is the collateral. The home is the collateral.
Okay, so this is very important to be cautious about it. So, but the people can use this money for anything that they need, like start a business, consolidate their debt, do anything.
Future investment, debt consolidation. They're buying a car for their son. They're buying a summer home. I mean, it's, you know, it's for their, what they want to use. Now we also have the line of credit.
Mm,
Line of credit, let's say based on that example as well, if we have it at an 8.5, but it varies. It could be 9.5 in a month. It depends with the market, with the feds. They go up and down, depends on what the feds, you know, are
mhm,
doing. So people sometimes have it available, you know, just in case something comes up, like kind of like a credit card is there.
mhm,
Something happens, I have those 100,000 just there for whatever it is,
mm.
but you're not paying anything. That money is just kind of like a credit card. It's just there for whenever you're able to
Hmm.
use it.
Do you
So you're
have
not
to be
paying
using it
interest.
gradually or no?
Um,
Just you
So
can.
yeah, you get checks and you could sign checks and, you know, I'm gonna give
Okay.
Nora 20,000. I'm gonna give, you know, my mom, you know, so you sign checks and then, but then you're just being charged out of the 20,000 that you just spent. That eight
That's
and a
nice.
half percent.
Okay. And the
You're not
interest
being
rates
charged.
vary based on
But
when you take this money. It's not when you sign up for that credit line.
no.
Mhm.
So that's
Okay.
20,000,
Got
let's say 8.5 right now, but maybe in 2 months it goes up to 9.5. You're
Got it.
half of those 20,000, let's say it drops to eight, it varies.
So still better than actually credit card interest.
Oh yeah.
All
Yeah,
right.
so a lot of clients have came up but that's when you don't want a line of credit when you
Mhm.
already know what you're gonna do. So they want to get a fix. Like, okay, I want to fix because I want to vote. I
Yeah.
know what I wanted. I need windows in my house. I know what I want this fees for.
Mhm.
Then you want to do something fixed because you don't, first of all, it's the interest rate is better and it's
Mhm.
fixed. It's
Yeah.
not variable. So you
Got it.
already know what it is. Unless if you don't know what you want it for, then you want to do that because you don't want to pay interest rate on just to have 100,000 in your bank account and you don't know what you're using it for, or you don't know,
Mhm.
you know,
Got
you
it.
just pay $75 a year to have this line of credit open.
Okay. Awesome. Thank you so much, Ines, for all this great information. Like, how can people get in touch with you?
So they could email me at www.emarquette.com/I Flores. They could also call me at my cell phone, 773-620-0310. You're sharing my website, which is great, and there's other information for them to get a hold of me. Thank you so much. And that's my direct line. I'm always available. If I don't answer, I will return your phone call.
Awesome. Thank you so much. This is awesome. Thank you for being here again with us. Okay, guys. So you heard from our three guests. They're amazing, all amazing, get you a lot of information and a lot of lessons that we can learn about mindset shifts. So make sure you listen to this episode as much as you can, as much as you want. I mean, whatever you need, go ahead and find the episode, find the guest that spoke about the thing you need more knowledge of. Connect with our guests. Connect with us if you need help connecting with our guests. You can always connect with us at hello@echoesofimpact.net. Again, that's hello@echoesofimpact.net. And let us know, what would you like us to bring you in this show? We are here for you. We're making this for you because we want you to be empowered to make an impact. That was your host, Noura Almasri. Until next time, keep making an impact.
This has been a Now Media Networks feature presentation.